listening to a Shift Gold interview hosted by Mike Maharrey. Today we're going to be talking to E.B. Tucker, the author of the book Why Gold, Why Now? The War Against Your Wealth and How to Win It. E.B. and I discuss the current state of the economy and how the powers that be are destroying our wealth. Specifically, we talk about dollar devaluation, inflation, and the power of gold as an investment to protect your wealth. We also talk about gold royalty companies and how they can work into your investment strategy. All right, E.B., thank you so much for coming on the show. I appreciate it. How are you?
Thanks for having me. I'm doing great.
Well, I really enjoyed your book. I read it actually in one sitting, so a lot of interesting information. A lot of it actually dovetails with stuff that I've been writing over at Shift Gold for the last 2 or 3 years. So looking forward to kind of digging into a little bit of the meat. But before we do that, I would love for you to just give folks a little bit of your personal background and how you got to where you are now.
Well, as you know, Mike, reading the book, the beginning of the book, I go through kind of how did I end up here? And what you'll remember is that I try to justify your time. I try to say, why should you invest this one sitting to read all this stuff? And I kind of explain how I stumbled into the gold market about 18 years ago. What my background was prior to that. I was an equity analyst, covering bank and insurance stocks, an active investor. And when I held the first ounce of gold and somebody kind of explained to me the history behind it, I thought, well, this makes a world of sense. And so the book arose out of frustration last year when I had so many wealthy people calling me saying, what do we do about all this crazy pandemic, stimulus, trillions of dollars and everything? And I got so tired of answering, and I sat down and wrote the whole book in 23 days.
Yeah.
And the subtitle of the book is The War Against Your Wealth and How to Win It. And so what you know is that you see a roadmap after reading the book. It's not about go buy gold, get a shovel, midnight gardening is what people call it, bury it in the ground. It's not about that. It's about, hey man, you've been working. You get up and put your coat on and go out the door every single day because you're trying to earn a better life for yourself and for your family. And that whole premise is in the crosshairs right now. And so how I got up to that point, when my first ounce of gold, 2003 or so, until the point that I wrote the book, a lot of things happened. I wrote a blog when blogging was a very new thing. I also had a stint through the newsletter business where I was writing Stansberry International, Bill Bonner letter, Doug Casey's newsletter, all these things you've heard of. So I wrote all those newsletters. I mean, if you ever subscribed to any of those newsletters, chances are I was writing it. My name was on it with those guys. They're all personal friends. They're all really great guys. But I was doing that and trying to build a portfolio that would beat the market for years and years. Gold always has been kind of the cornerstone for me. It's not because I'm a huge gold bug. In fact, in the book, you'll see that I'm not some guy that thinks you need to just have all your money stored up in gold. I mean, that's not the case at all. I mean, we actually have a chapter, how much gold should I have? It's a question that people have a hard time with. We give a formula. We talk about what that should look like. And you're what you want to do is you want to see the way the dominoes are falling and then position yourself. And so we can kind of dive into all that stuff, and talk about how it happened. But, to your point, the book was designed so that somebody that had a little bit of experience, could understand exactly what's going on in a sitting.
Yeah. I think you did a really good job explaining a lot of the real nuanced monetary policy stuff in a way that I think your average educated person can grasp. So that's fantastic.
Well, they know that MMT, modern monetary theory, is a problem, but they're not exactly sure why. I mean, they know that paying people to stay home is a problem, but they're not exactly sure what the consequences are. And so you're right. These are they know negative interest rates don't work. I mean, when you were a kid, your grandma had a passbook savings account, and she was go buy a CD every now and then. That's what we grew up seeing. That's over. You have negative. You pay money for the CD now. It's crazy.
Right. But the smart people in the room are telling us this is all fine and normal, right?
Yeah, and you buy some dog coin, and you speculate, and
Right.
you buy bizarre tech stocks and all these things, and you trade all the time, and just don't even worry about what's going on over here. Leave that to the experts.
Yeah. So really, fundamentally, what we're talking about is at the crux of all of this is currency devaluation. Why aren't more people concerned about that?
Well, I don't think they know what it means. I mean, the big problem, and this is for everybody listening. I want you to question one premise that you've got totally wrong. The US dollar is not designed to be your personal savings vehicle. Like everybody thinks, well, this dollar should be where I store all my money. Well,
Right.
why? I mean, it's totally false. And there's been no currency in the history of the world that's been, hey, we'll make this really sound. The purpose of monetary policy is to control the population, to
Mhm.
keep the economy under control, and to have the levers, where the guys that are running things can operate it. And as you see, the long-term trajectory of the dollar is very low. We say in the book in 19 teens, if your ancestor had put $10,000 into an envelope, it's worth $10,000 today, which is
Right.
not very much money. And if they had put 10,000 worth of gold in an envelope, it's worth about 90 times as much. And
Right.
people say, well, wait a minute, what does this mean? All it means is it takes more dollars.
Hmm.
And you're going to see more and more of that. Now, I don't think we're headed into some period where you have wheelbarrows of cash, and then you're going to be silver coins at the
Right.
drugstore to try to get your supplies. It's not like that. It's just they're trying to engineer a water landing here. That's what they're trying to, like that guy that put the plane down in the Hudson. I
Oh
mean,
yeah.
they're
Yeah.
trying to engineer a scenario where they can make the debt an afterthought by controlling inflation with monetary policy. So far, it's working. I mean, our hats are off to these guys because nobody notices. I mean, take, for example, there was a big push for minimum wage $20, and everybody fought against it.
Right.
But now you cannot find help anywhere. Every single storefront, help wanted, help wanted.
Hmm.
The McDonald's franchisee where I live, I know the guy, he's got 80 McDonald's. There was an article in Business Insider about him. He's advertising $50 for any application filled out. So remember, McDonald's used to be where you go get your start in life,
Yeah.
flipping burgers. But now they'll pay you $50 just to fill out an application. Well, what does this mean? This means there's a labor shortage.
Yeah.
Well, you pay people $17 an hour to stay home, and nobody wants to work. So, and the people that do, you got to really scratch your head and say, have you thought this through?
Right.
I mean, you're making $9 an hour. You could be home making 17, man. You're crazy.
Yeah.
So that's all by design. And there's more dominoes to come. And people, once they see all these dominoes, instead of being upset that the dollar is not a good savings vehicle, they'll start thinking, well, wait a minute. If I can see where the ball's headed, I can go play the game down there before it gets there, and I really have an edge, and that's what we want to help people see.
Yeah, for sure. It's interesting. There was an article here in we call it the Mackerel Wrapper, the local paper here up in North Florida, about the exact same thing. Shortages of workers. We've got tourist season rolling up, and nobody can hire anybody. So you've got 2-hour waits at restaurants, and then yet on the other side of the coin, you see that unemployment is 6%, which I think it's higher than that, really. I mean, the way they cook the numbers. So that's
Right.
we're definitely seeing. I say this all the time, and people can't seem to wrap their head around it. Incentives matter, right?
All right. So think about it like this: the biggest portion of tax revenue for the feds is payroll tax.
Mm-hmm.
It's a tremendous portion of federal income tax. Everybody thinks it's, estate tax is nothing. It's tiny. And so you add up all these taxes, payroll taxes, everybody that's minimum wage worker is paying about 15.5% payroll tax. The employer pays half, they pay half. If you have wages rise by 10%, then the payroll tax take went up by 10%.
Mm-hmm.
And everybody even our friend Peter Schiff talks about the debt, if the interest rate goes up. It's not true, because the interest rate can go from 1.6 to 2.6, and you've more than accounted for that by having higher wages and collecting the tax off of those wages. Now, I'm not advocating that this is an idea that we morally agree with. I'm checking my morals at the door and looking at what is.
Right.
And if you're a central planner, this is a great plan, because the average person has no idea. And then when they go get a gallon of milk, and it's cost 10% more, they barely even notice, because it's a little bit here, a little bit there.
Right.
It takes a long time before people. In the 60s, we had a lot of inflation, and housewives figured it out.
Yeah.
Remember this when Nixon gave that talk in August of 71. There was an uproar with housewives that were saying the butter is so much more, and there were hardware store guys saying the anything that was a commodity started to cost more. And this happened for about 5 years before they actually pulled the switch on the gold convertibility. So I mean, this stuff lurks in the system, and what they're counting on now is that you're not going to notice.
Yeah.
You're not going to notice it. A little bit here, a little bit there. You get a little stimulus, everything is groovy, make some money in your dog coin, you're fine.
Yeah.
But then all of a sudden, one day you turn around and you think, what happened? How did I see this coming?
You know what's interesting? It seems like the people that are noticing it now, the people that are coming to me and saying what's going on, are the folks that are at Home Depot, because you're seeing these skyrocketing prices in plywood. And in fact, I saw a funny meme the other day. It was a photo of a guy like with a real pretty woman. They're all dressed up. They've got a dinner table, and there's plywood stacks in the background, and the caption is something to the effect of he wanted to take me someplace expensive for dinner.
Exactly.
So it's definitely there.
It's up about almost 400% in the last year. And people say, well, how many 2x4s do you buy? Well, if you're building a house, you buy a lot of them.
Right. Well, yeah.
And so all the sawmills are limited capacity. You got tariffs from the Canadian lumber. I mean, copper has doubled in price. Cement's up. All the agricultural commodities are up. This is not a passing fad. And I spoke with a builder last week that said, we're going to wait till the end of the year to pull the trigger because we think the prices will go down, but they're not going to go down.
Yeah.
That's what people need to see, because there's more coming. Okay. Eventually what's going to happen is every product you buy will have an additional cost that accounts for the effect on the environment.
Right.
People have a hard time seeing this, but that's going to be another layer of increases in cost.
Mm-hmm.
And then you look back at the last 20 years when everybody was pounding the table about the debt. The debt doesn't matter, because as GDP artificially grows with all these different pressures pushing the cost higher, the government's take grows.
Right.
So they can, what used to look like a lot of money, $1 trillion here, $1 trillion there, it's nothing.
Right. Well, you mentioned the debt. Let's talk about that for a second, because one of the things that you observe in the book, and something that I've actually written about as well over the last couple of years, is how, as we go through these cycles, we look at we call it the boom bust cycle. You go back to the 90s, you had the .com and that bubble burst, and then you had the financial crisis. Every time we go through the bust, it takes more debt and lower interest rates for a longer time in order to reinflate the bubbles and recreate that boom, right?
Yeah.
So, I mean, how long can it go on? Can it go on indefinitely?
A little while longer. So a little while. I mean, I would focus more on playing the next domino instead of becoming an ideologue and saying this just is not right and it can't carry on, because you might be doing that for decades. I mean, who knows, right? Right now, people are taking this current arrangement pretty well. I mean, the interest rates are negative. Now, people need to understand, they say rates are going up. They're not going up. The 5-year bond, let's say that it pays 80 basis points. Mm-hmm. That's 0.8%. If you go on the Federal Reserve St. Louis website, which is very easy to use, and you look up the interest rate on the TIPS. Now, TIPS are inflation-protected securities. The 5-year rate on TIPS is negative 160 basis points. Okay, so what that means is that the market knows that there's 2.5% roughly inflation right now per year over the next 5 years. And that's going up.
Right.
And so if you buy a bond, you make 80 basis points, but you lose because inflation is cooked in already. People see it coming, and there's going to be more of it. And so to answer your question, it's working fine now. Nobody notices. And so you see, we had that shock last year. Stock market loses, 8 to 10 trillion of value in 2 or 3 weeks. Howard Marks, one of the best investors in the world, they tried to raise a distressed debt fund. By the time they got the fund raised, there was no more opportunity because the Fed stepped in and bought junk bonds. Mm-hmm. How are you gonna trade that? I mean, it's just no possible way, because it's not a real market. So all the guys that I grew up working with and came into the business with are sitting around. They're doing channel checks. They're staying on top of the numbers, doing these things. It doesn't matter. This is a controlled system. In the book, I call it a crisis system.
Yeah.
And a crisis system is a perpetual boom with the occasional brief crash.
Right.
That's a crisis. Now, in a market-based system, which we had up until really the early 90s, you went through these cycles,
Right.
of you'd have your grandpa would say, now look, don't borrow too much money, because you might not make it through the downturn.
Mm-hmm.
But now it doesn't matter. It's in fact, what happens is you're crazy if you live responsibly. I'm not encouraging people to not live responsibly. I'm just saying.
Right.
I was on Robert Kiyosaki's show, Rich Dad, Poor Dad. I told him, I said, you write that book again today, Poor Dad is the genius. Rich Dad's the idiot.
Right.
Because Poor Dad's spending every dollar he gets his hands on, and he's having a good time. But Rich Dad is cutting his own yard, and there's no reason for it, because the game has changed.
Maybe I need to call that lawn guy.
Exactly. Yeah. There's no reason for it, because all these values that we were taught, around the dinner table, are for a different time. And so I don't have any debt. I mean, I'm not playing the game that way. But when I look around, I say, okay, how is this going to end? And what's going to happen is that you're going to turn around, and Dogcoin is going to be worth about what Dogcoin is worth, which is not very much.
Yeah.
There's going to be Fedcoin. Okay, and that's chapter 17 in the book.
Right.
It's going to be Fedcoin, and there's a reason why the federal government and the Federal Reserve love a cryptocurrency. The Chinese are doing it right now.
Yep.
It eliminates counterfeiting. You can have capital controls on individuals. You can have a social credit score if you vote for the wrong person, if you don't wear a mask, if you have a lot of things to say about freedom, and you have all these controversial opinions, you can be sanctioned on an individual basis. Your Fedcoin wallet, no more leisure spending for you, Mike.
Right.
You've been a bad boy. You can only spend, at the Home Depot and on your basic essentials, but no more money for, booze and movie tickets and parties and stuff.
Right.
That's out the window. So it's real. It's very real. And Fedcoin is not going to be, like something you buy for 10 cents and it goes to 60,000. It's not going to be like that.
Right.
People have got to see that that's happening right now. And so you look and you say, well, why does gold matter? Well, gold is analog wealth. It's analog wealth. Well, why would you want analog wealth? Well, once you see what Fedcoin looks like, you'll see the value in having just a little bit of analog wealth, just in case.
Yeah. You make an interesting point in the book, and you've kind of alluded to it here. I want to hit it head on about the way the system is completely manipulated by the government and the Federal Reserve. And you actually call it price fixing of money. What do you mean by that?
So
how is the government price fixing money?
So I know a guy that was the former president of Cato Institute. He was the chairman of a bank that's now about the sixth biggest bank in the country. And he used to joke with the regulators, and he would ask them, well, why don't you guys fix the price of oranges? Because we just had an orange crop freeze and the price went through the roof. And the bank inspector said, this is the United States of America. It's a free market. And he said, well, yeah, but you fix the price of interest rates. And the guy was very upset, and he said, well, that's different. But it's not different.
Right.
When you fix the price of something, there are market reactions. If you fix the price of orange juice, the regulator knows that you would reward growers with an inferior product, and you would punish growers with a beautiful organic orange. There'd be no incentive. And that's what the Fed does, is that they fix the price of money. And so it rewards people that are profligate spenders, that make bad choices and that use the system to grow instead of using business acumen to grow. And it punishes people that preserve capital and store it and make good decisions. Once people see that, they realize that this is not a market-based system.
Right. I tell people that all the time. They go, oh, your capitalist free market system, look what it's done. I go, no, don't blame me. I didn't do this.
Yeah. Well, it used to be that way. It used to be a free market system.
Right.
Now, if you look back, what you see is that about the time the Soviet Union fell was really when we shifted into this mode of binge borrowing and controlling the economy into a controlled economy.
Mm-hmm.
And it's really it's a lot like what you see in China. You have the government keeps a really tight grip on major influential companies.
Right.
You're not going to see a competitor to Twitter. And if you're on Twitter and you say the wrong thing, you can be off Twitter overnight. Your tweets are say not verified, and that's then people will say, yeah, but this is a free country. You can say what you want, but you can't. I mean, you got to wake up and see this.
Right.
And so once people are awake and they see this, they realize, wait a second. I mean, I've got to play the game in front of me instead of dreaming about some game, from another generation.
Yeah. And I mean, honestly, that's hard to do. When you're raised with these values, I mean, I could still hear my grandfather's words echoing in my head. It's hard for us to break out of that way of thinking because, I mean, that's the moral and right way, right? I mean,
yeah, but you have to ask yourself, why am I gripping on to that?
Right.
It's just like you leave the house in a bathing suit and it's snowing. And you say, it's really hard because I was told to wear a bathing suit and I want to wear a bathing suit. And then your friend says, yeah, but have you looked outside?
Right.
Well, I can't do that because when I was told to wear a bathing suit, I decided that was what I was going to do. So open up your eyes and look around. And when you start looking around and you start thinking for yourself and you wake up, it's actually quite easy. Yeah. And it's much better. What happens is I don't have a television, for example. People say, well, how do you keep up with what's going on? It's very easy. I mean, everything that comes out of the television is programming. They call it television programming for a reason. It's a controlled message. Mm-hmm. You hear about the shooting that they tell you about. There's shootings all the time. You don't hear about them. You hear about the one they tell you about. So you'd be surprised how much different life is than on television. Well, what do? Well, you get some art. You can look at the art. You read some books.
Right.
You have people over. You talk. You tell stories. You talk about places in the world that you've been. You teach your kids about this stuff.
Right.
That's valuable. That's teaching your kids how to think for themselves. People ask me this all the time. What do you do for your kids? Teach them how to think for themselves. Let them choose the life they want instead of programming them to follow along, on a path that's not working. It's a dead end.
Yeah, absolutely. I want to kind of pivot back to the whole interest rate manipulation that's actually going on. And so, simple guy, you see the fact that they are artificially keeping interest rates low. They keep the federal funds rate at zero. They utilize the bond market by purchasing bonds. They do all of these things to keep interest rates low. On the flip side, we have obvious signs of inflation. People are seeing it in the markets. We're seeing it at the lumber store. The prescription for dealing with inflation is to let interest rates rise. Now, you've kind of touched on this, but I want to hit it a little bit harder because it seems to me that at some point you're in a situation where right now the Fed's solution to inflation is just to tell us it doesn't exist or it's transitory. What happens at the point the Fed identifies and admits that there is a true inflation problem? Do they let interest rates rise? Can they with the debt, or will it kind of take care of itself because of the way that the system is slow cooking?
Well, the Fed is a reactionary organization.
For sure.
So again, everybody assumes the Fed's there to help them. It's not. It's the path of least embarrassment. Now, You hear right now all the time they say, well, we're going to run a little hot right now because we had 0% inflation. Right. So we want to have 2% inflation. So we're going to have 4% inflation.
Right.
So that we make up for the 0% inflation. But the reality is, as you know, is that you're really having more than that, but you change the way the numbers are put together. Now, why would this be the case? Okay, for simple people, let's boil it down because we're all very simple people at the core.
Sure.
$100,000 you save up working at your job, putting it into the bank every single week, got $100,000 there. The bank says to you, we're going to give you zero. And you say, well, okay, I'll still keep the money there.
Right.
Bank says we're going to now charge you $1,000 a year to keep a balance more than $10,000. What are you going to do with the money?
I'm going to get it.
Right. You're going to get it out. And first thing you're going to do is try to put it in cash, but not going to be possible because they can't give you that much cash. So you're going to spend it. Now you have choices. You're going to spend it on doing something in your life or making your house better or buying a rental property or something, but that's not that good of a deal. because there's so much money that the rental property only produces like a 2% return, not even worth your effort. You're going to be over there repairing the toilet and stuff, and then you're going to think it's not even worth it. If you're wise, what you'll do is realize that in an environment like this, you have to speculate. This type of environment rewards speculation, not investing. So you want to find ways to speculate. And so what the Fed realizes is that not everybody will be wise enough to speculate. A lot of people will spend the money. Well, what does that do? That pushes more money into the system. More payroll tax, more income tax for the business owner, more fees, more fees for the accounting person, more mortgages being written, more lumber being purchased. I mean, that solves another problem because you have this giant pile of debt. And so it's easier to service that debt because your GDP is growing. Everybody's going to the mattress. Where's that cash? Spend it before it's worth less. And so then finally you get to a point where the Fed says, now this has gotten out of control. Now we're going to fix it. So that's ahead though. That you want to do something before that happens. Because it's like when Volcker came in. Okay, well the gold already went to 800. Back then. I mean, it was too late. What are you going to do then? I mean, and sadly, that's when most people plan is after the hurricane. The hurricane comes through. They say, you know what we need to do? Get some property insurance. But it's too late. The storm already happened. And so now is your chance because your peers and your neighbors, they don't see this. Like the whole millionaire next door concept. This is the last guy to figure it out. This is the last guy because he's holding on to all these ideas. Oh, we'll get them back in the midterms. It's like, okay, well, whatever, man. That you're asleep, okay? So you're the last one to know, and you're millionaire next door. And now you're a thousandaire next door, because you got left behind. And so sadly, they put you in a position where you got to take some portion of your money and speculate in a way that you're comfortable, because the money that's sitting dead is trouble. I mean, it's eroding value.
That's the guy that's over at the Publix trying to get the bottled water when the hurricane warning comes up.
Exactly. Too late. Yeah, it's too late.
So you mentioned the domino. So what do you think the next domino is?
Well, you've got this scenario now where you got to look at what the U.S. is going to do in the face of China. I mean, the U.S. walks around with this big baseball bat in their hands, and they say, this country's bad, so they can no longer transact with the rest of the world. And that pushes the country into terrible condition. Warlords are taking over and stuff. And that's what the U.S. does. And they've done it in Hong Kong recently, and they've done it in Iran, and they've done it in Turkey. And everybody says, well, these are bad places, because I don't know where they are on a map, but I watched the 60 Minutes, and they told me that this is the women's rights situation there was terrible. And so I just think we should just cut off their access to the world. So that's not going to work forever. And so the Chinese have created a digital yuan because maybe they read my book, I don't know, but they realized that they can have total control, and then they can circumvent sanctions this way. Now, what will the U.S. do? I mean, I think the move to a U.S. Fed coin is it's a lot closer than people think. And so I think they've gotten everybody used to cryptocurrency. Now, imagine 5 years ago, people say, well, I'm not interested in learning about that. Now they say, do you have any suggestions of online sources for me to learn about this? Okay, well, everybody's comfortable. So when they say, the dollar's under attack, our sovereignty's under attack, this nation stands for freedom to sanction people and all this stuff. So this will be the rollout. And I think it's a huge game changer, because what happens is that every single currency unit is then totally controlled. You might have like 1s, 5s, 10s, and 20s, but you only have up to 100. I mean, I don't know about where you live, but for me, 100 buys lunch for 2. Because you got to tip people about 30% now, because they tell you how they grew up to be a professional waiter and they just can barely get by. So $100, man, that's nothing, and you still can only bring 10,000 into the country or in or out. And if you have 10,000, they'll say, are you a terrorist? I mean, are you a drug dealer? Are you trafficking someone?
They're liable to take
$10,000. Yeah, I mean, $10,000. It's like if you stay at a nice hotel for 3 nights with your family and fly there, that's a $10,000 vacation. I mean, imagine, like that's That's the limit of how much cash you can transfer. And your fellow citizens are the biggest enemy because they've been trained to, you see something, say something.
Yep.
You saw Mike with $1,000, he must be up to something. Why don't you turn him into this tip line so we can check him out a little
Right.
bit? I mean, okay, so once you have total control, your options change. So everybody's got to see this coming because we're very close to this. And now let me just be really clear. I'm not saying that you're up to something. What I'm saying is that when in history has total and complete control ever done you any favors? I mean, imagine it's like okay, no, we're here to help you.
Right.
We're total control to help you. Okay, so I think once you see that, you think maybe before this domino falls, I should at least have 1% or 2% in gold or something, just in case total control doesn't work favorably for me.
Right. I don't think it's going to work favorably for me.
No, it never works. I mean, imagine it's like in Europe, in the previous century. Where are your papers?
Right.
Where are your papers? I mean, this is the same thing now. Where's your vaccine card? Where it's the same thing. And so what did people do in advance of that situation in Europe? Is that they tried to at least arrange an emergency plan in case the worst happened. And the worst did happen. So the emergency plan was not to profit. It was to stay alive.
Right.
I mean, that was the deal. You weren't trying to, you were trying to get across a border and be able to bribe your way into a free area. I mean, I'm not saying that's going to happen. I'm just saying you don't know what's going to happen. I don't know what's going to happen. I can tell you what looks like is going to happen.
Right.
And it doesn't look good for free thinking people. That's the problem. I mean, if you go to Cambodia, to S21 or to the Killing Tree, all this stuff,
right,
what you see is that they didn't get rid of the people like that in the U.S., for example, that are 40% overweight, taking 4 different psychotropic drugs every day, watching the television and can barely get themselves to the hip replacement. This is the kind of person that is lifted up as a hero.
Right.
The enemy is the kind of person like, look at yourself. Look at all those books behind you.
Right.
You're dangerous.
Yeah.
Because you ask a lot of questions, and we don't take kindly to that because you're making it difficult for us. So you already see this happening, and I think people, they got to see that we're pretty close to that. You're talking about vaccine passports. Why do you need a vaccine passport? I mean, if you have the shot and you go to the grocery store, no mask, they come and act like they're going to take you to jail.
Right.
Well, I had the shot. Well, you still got to wear the mask.
Right.
Well, what was the point of the shot? Well, you're going to have to get another shot.
Right.
We got to beat this pandemic, and we need more checks for people too in the meantime. So I'm not getting into the efficacy of that. People have suffered with this. It's,
right.
I don't want to dispute that at all. But my point is that you're seeing more control, less freedom, but the dream is still alive. People are grilling those hot dogs, saluting the flag, and this is the land of the free,
right,
the home of the brave. You just don't say anything that tips off the Gestapo, because then you'll have a problem.
Right, absolutely. And it's it is pretty shocking, just looking back over a year, how much things have shifted. And that was one of the things that was most distressing to me as we got into, June and July of last year. How many people just went along with what, in my view, is pretty draconian. And you realize that, I think a lot of people take solace in, well, we won't let that happen because we're good people. And I think my eyes were opened a little bit to maybe my neighbors aren't as trustworthy as I might have hoped, not to be too cynical.
And imagine people's it's not for me, it's for my Aunt Lucy, who,
right.
Okay, good. I'm just going to have a double mask on in my own car with a dental shield and gloves because the news, now I don't need that anymore. Now I need to wipe the vegetables down with Lysol. I mean, everybody forgets. And so what you see is that people in the U.S. will do anything you tell them to do.
Yeah.
They'll do anything. And eventually they'll say, round up those people and put them over here in this camp, and they'll say, I didn't know what was going to happen to them. I just was doing what I was told.
Right. Right.
That's how, and it's not personal. Now, people get all upset about this. Say, listen, you got to play the social game where you are. Okay, you're not going to change anything. So don't be going around, like being a one-man stand, and you turn into a Wikipedia page or something.
Right.
This is very stupid. You gotta go with the flow, okay? But just open up and see what's happening, and remember the war against your wealth. Well, you're not trying to become a billionaire. You're just saying, I want to maintain some autonomy. That's what I'm trying to do, is to maintain some semblance of self-support as we transition.
Yeah.
Because there's always going to be something to do. You have machines replace people, then they got to pay some people because they can't work, to keep the machines going. And they got to pay somebody to program the machines, and
Right.
that could be you. So that's kind of the way to see it, and it helps you not be upset, but to go with the flow, but also to be aware.
Yeah. It's be prepared. It's the old Boy Scout motto, right?
Exactly.
Yeah.
Can't do that. Can't be a Boy Scout anymore, though. By the way, because
no, that's against right. That's against the rules.
You got to just be a scout.
A scout,
because you can have a gender transition scout or something, and they would feel put out if you called them a Boy Scout.
Right. Right.
Yeah.
Before we wrap up, I think a lot of this audience is pretty savvy when it comes to physical gold investment and that. I wanted to touch a little bit though on the royalties. That's something that you hit on pretty hard in the book, and honestly, something I knew virtually nothing about. Can you give a real quick overview of why is this a good investment?
It's very easy. It's very easy. So don't worry, people. So gold mining is a terrible business.
Mm-hmm.
You got to go to the middle of nowhere, and you got to find the gold mine, and there's all kinds of tribes around there. You got to contain them. It's terrible.
Right.
And most gold mining stocks don't do very well. Now, sure, you can have a run. Okay, fine. You have that, but there's a lot of them that never amount to anything.
Right.
Now, royalty is very different. What a royalty is it's a claim on 1% or 2% or whatever the claim is on every ounce of gold that ever comes out of the ground on a fixed amount of space. You've all heard the stories about the old farmer in Texas riding his tractor, and the oil company says, if you let us poke some holes in the ground, we'll give you 1% of all the value of the oil that comes out. The next thing you know, he doesn't even need to drive the tractor anymore. He's getting checks for $100,000 a month. Okay, that's what a royalty is. Mm-hmm. It's a perpetual carried interest in a mineral asset. Now, but Metallo Royalty, now this is a New York Stock Exchange traded company. MTA is the ticker. It's in Canada as well. I was a founding shareholder of this company. I'm on the board of directors of this company. As you mentioned, I tell the entire secret sauce in the book.
Yeah.
This company is fascinating because you can operate it with very few employees. About 5 employees is all you need. And what happens is that we go around and we acquire these 1% interest in mineral properties. And as the companies develop those properties and turn them into mines, you've got a 1% interest in the mine. Now, the cost of the mining is on the way up, by the way. So oil's up, labor's up, equipment's up.
Sure.
Everything is up. Transportation's up. All this stuff is going up. So the mining company is always having to try to struggle to get more and more out of the ground, well, guess what? The royalty is 1% is 1%. It's not 1% of profit. It's just, you get 100,000 ounces of gold, the royalty company gets 1,000 ounces of gold, no cost. And in the book, I explain how this happened. Franco-Nevada, which is a famous royalty company, bought a royalty in Nevada in the 80s for $2 million from a bankrupt oil and gas company. Mm-hmm. And American Barrick found a huge gold deposit there. This is about 45 million ounces pulled out of the ground. And the company's received over $1 billion in cash payments since that time at no cost. Yeah. So people need to see that this is not something we invented. We have our spin on the business. I mean, we found that there were a lot of orphan royalties owned by prospectors and small companies and family trust and things like that. And we could go around and buy those in exchange for stock in our company. We bought 69 of those so far. Now, final piece here. What happens is you end up with 69 royalties. So all those royalties cover lots of different pieces of ground all over the world.
Right.
And the mining company is hard at work proving how many ounces they have. So they got 1 million ounces, 2 million, 3 million, 4 million. They're always trying to prove they have more, because that's what they do. When the price of gold goes up by $100, your royalty company gets credit for those ounces that are coming in the future.
Right.
So you don't really care about the cash flow now. You just say, I got 20 years of mining left on this site. And I'm going to be getting 1,000 ounces a year at $100 more than I expected. I mean, imagine if you bought an apartment complex and the apartment's leased for $1,000 per apartment. And then once you own it for a year, it goes up to $1,200.
Right.
Well, the apartment complex is worth dramatically more because you're going to own it for 20 or 30 years.
Right.
And now you're saying, man, I thought I was going to get 1,000 per apartment. I'm going to get 1,200 a month now. I mean, this is a tremendous increase that I wasn't counting on. So the point there is when Metallo went public initially, about 80 cents, it's almost $10 now.
Yeah.
So that's about a 1,200% increase in the price of Metallo, okay, and ticker symbol MTA. The price of gold is up about 50%.
Right.
So what happens is those royalties, that future value of that higher gold price, is captured by the royalty company. Okay. Now, the reason I explain this in the book in part 3 in detail, and very personal detail, by the way, because Brett Heath, the CEO, and we worked very hard to put this together. I tell the whole secret of the business because once we see a higher gold price, now I'm not talking about 10,000. I'm talking about like 2,500. I mean, this is you're going to have to peel me off the ceiling at 2,500.
Yeah.
That's only $700 higher than today.
Correct.
But that $700 is captured by the royalties, and you see dramatic benefits as the royalty owner. And it's nice to own a coin that goes from 1,800 to 2,500. Sure. But the value of hundreds of thousands of ounces of gold in the ground, the increase is spectacular. And I think you'll only see that once. I think that type of increase, it's kind of like what happened to Bitcoin. It's like once the light bulb goes on,
right?
The professional investors say, I'm in a world of 0%. And I've got these royalties generating, higher rates of return on an asset that's kind of indestructible. I mean, gold is, theft is your biggest problem. I mean, it survives a house fire. So, I mean, as long as no one steals it, and a great place to hide it is buried in the ground in the middle of Nevada. I mean, it's very hard to steal. Yeah. Right. So the royalty gives you that long-term exposure. It allows you to speculate. When we talked about earlier, speculating needs to be something that everybody considers. And if you go out and buy a 10-cent stock hoping it'll go to $5, good luck. Right. But the royalty gives you a way to take a benefit from that rising gold price in a pretty serious way. And so, people can check out the website Metallo Royalty, and the stock trades very heavily. It's not a huge company, but it's not like a tiny company either. I mean, it's traded about $5 million worth of stock today, and trades in the NYSE. And it's we when we started it, we had 0 royalties. Now we have 69. And hopefully that was 4.5 years ago. So I mean, the business, it's been a steady grower, and it's not some overnight success. I mean, you can see in the stock chart, all we did was we added one, and then the pile gets bigger. Some of the royalties turn into mines, and then, some of them get bigger. Right. All these things kind of happen. Building a business, and the wind is at your back. And people got to see, you don't want the wind in your face. Right. If your wind's in your face, turn around, let it go on your back, and you can make more progress. I mean, that's that type of gold market. Gold's rising steadily, which is what it's done. And I think we're on the cusp of another serious rise. I mean, last year over 2000. We saw that kind of get popped down. Right. But if you notice, silver hasn't gone down. Yeah. Silver's almost where it was in the summer at its high, and it's actually a lot higher than a year ago. I mean, it's a significant increase. Yeah. And almost double. And gold is back where it was a year ago. And I think what we're seeing from the guy, we were very connected in this business, and what we're seeing is that everybody's positioning for that move. And a couple $100 in the gold price is I mean, you're just it's a step for gold. It's a leap for the royalty companies.
Yeah. I'm curious about something just from let's say I have a royalty. Why would I want to sell it to you?
Well, you don't have to, but
Well, no, I don't have to, but why would I? I mean,
yeah, so,
I don't. That was the thing that
yeah,
I was trying to wrap my head
yeah.
around as I was reading this, like from a
So
business
here,
standpoint.
yeah. So here's what happens. So most of the royalties we bought, we come to you and we say, look, you found this gold deposit in Quebec in 1992.
Mm-hmm.
And then it was bought by a little company, and then big company bought it, and you're finally licking your chops that this thing is going to go into production next year.
Right.
But the problem is you have one royalty, and you're not exactly young anymore. So the problem is that if this mine gets delayed, or there's a pause in production, or anything happens, you're in trouble, because
Mm-hmm.
this is your only asset. And
Right.
also, it might be worth $10 million by itself. But as a collection of 70 royalties, it might be worth more than that, because you, with 70, you don't care if there's a delay at that site.
Right.
Because you now benefit from the diversity. And the same thing happens with companies. Like private equity companies will go around and they'll buy up all the tire stores in the whole state of Florida or something.
Right.
And the reason why they do that is because one tire store is a nice business, but 50 tire stores is a tremendous business. It has all kinds of efficiencies.
Right.
You diversify your risk. Now, you got to buy similar sized tire stores. I mean, you can't buy one gigantic store and then a bunch of small stores, or else it doesn't work.
That makes sense.
So as we've come to people like you and we've said, look, we'll buy this from you, but we're going to pay you in stock, and we're going to be a little bit on the cheap side. So you don't have to sell to us. I mean, you can keep it, but I think as well as we do that as a part of this company, you're going to have liquidity. You'll be able to sell some stock whenever you want. You could give stock away to your kids or grandkids or your church or something. Do whatever you want. We won't even notice. I mean, it's yours to hold on to, or you get into a bull market, you want to sell. Otherwise, to sell that royalty, you'd have to hire an investment bank, go through a process. You don't know if you're getting the best price. You're going to pay cash. You're going to pay a lot of tax on the cash. It's a nightmare. So there have been people that said, I'm going to wait. Let me see how this goes. You guys are just getting started. But then as we did, probably 20 transactions, I think people started to then say, wait a minute. I mean, if I had sold when it was 90 cents or $1, $1.50, now it's $10.
Yeah.
So I would have taken that whole ride all the way up. And so that's how we built the business. Now, what people need to understand, Mike, is that I just told you the whole secret sauce to the business. So why would I do that? Well, because people aren't very good at this business. And what happens is that they issue too much stock, and they're profligate spenders. And so we've willingly shared our business formula and watched people try to copy it, and they can't do it.
Right.
So it takes many acts to build a reputation. And just so people know, Brett Heath is the brains of the operation, the CEO. Mm-hmm. I was his business partner years ago. We had an asset management company. We focused on gold stocks. We have a long history together. But Brett and his team are the guys that are analyzing the deals, that are out at the sites, that are working, kicking rocks. I mean, they're doing this stuff 24/7. As you know, in the book, it's the most I've ever bet on one investment. I mean, I bought stock. You can look up on the insider. You have to file with the regulator every time I buy stock. You can look it up. I mean, there's just pages and pages. I bought stock all the way up. Yeah. All the way up. The whole, even higher than it trades today. I bought all the time because this is my play for this gold bull market. And I think people need to see I couldn't find a company that would give me what I was looking for. So we created a company. Yeah.
Fascinating. So that really helped, because I understand that now, because from my perspective, I'm now in effect the owner, or the part owner, of 69 royalties, as opposed to just holding my single one.
Yeah. So I mean, imagine trying to give that away to your grandkids.
Right. Oh,
like, you have 10 grandkids, you're going to split it by 10. You got 2 ex-wives, and what are you going to do? It's much easier if you can then say, I'll give you 20,000 shares of stock, and I'll give you 50, and maybe I'll give you some once you graduate college.
Right.
There's an appeal, and what that means is that we're not negotiating in a binary situation where we're trying to be cutthroat with you. We're just saying, hey, I mean, you got a lot of options, but this is one good one and you can consider it, but you might want to do something else. Yeah. I mean, everybody has different needs. I mean, you have different places you are in life all the time. And so we've had to always have, dozens and dozens that we're going after. Because it takes a long time to do this. I mean, there's no Zillow.com or Realtor.com for royalties. I mean, this doesn't exist, and you can go to an investment bank, but what's going to happen there is you're going to pay top dollar, and you're going to be competing against, numerous companies, and if you overpay, then later you have to write that asset value down, and we've had no impairment charges at Metalla, which what that means is that you overpaid and then you have to later come back to earth. There's no point in that. And part of the reason why is because we've bought a lot of stock. I mean, and so when you've bought a lot of stock, you're very much interested in discipline. Right. If I don't have any stock and I don't care, then I'm spending other people's money. Right. That's a different position. But we've had a good time doing this. I mean, it's 4.5 years. About 5 years ago is when we started putting it together, and it was an open deal. It was a deal. I gave a presentation at Sprott Resource Conference in 2016, July, about exactly what was going to happen. Some people listened, and they could buy that stock in the market, before it all happened. I mean, it was open to people. It wasn't an insider deal, for just half a dozen people, and everybody else pays a higher price. I mean, if people took action, some people did, by the way. They come up to me and say that they bought the stock, at 80 cents US, and they've ridden it the whole way. And I tell them, I mean, the gold price hasn't even moved yet. That's right. That's just so crazy. I mean, this hasn't even happened yet. You're excited for the warm up show, right? Right. I mean, wait till you see the real show. Right. Well, that's fantastic. I appreciate the explanation, and I'm sure that's information I'm pretty certain that a lot of folks are not aware of. So, well, Mike, you look at your holdings. You've got your physical metal. You got your royalty stocks. Maybe you have your exploration stocks. Maybe you have some S&P 500 stock. I mean, maybe you even have some bonds. I mean, you have all these buckets. And so what people need to understand is successful investors are wealth managers. They're their own wealth manager. And so you don't bet everything on horse number 7. It's not the way it works. But you create these buckets, and then you manage those buckets. And over time, what happens is that you have stability, and you ride up these trends, and you feel a little bit more in control of things because you've got a plan. Well, I'm going to let you go. We will put in the show notes page link to the company, of course, to your book. Want to encourage people to go out, buy the book. It's worth the read. I've got it's right here. It's easy to find on Amazon and Audible. It's me reading the book on Audible. People seem to like that, and Kindle, and you can get it at your local bookstore. They'll order it for you. It's I get a lot of messages from people. There's a connection to my LinkedIn at the end of the book, and it's follow us on the journey. I mean, it's a journey. We're all on a journey, and you should be enjoying yourself and knowing what's going to happen and having a plan it makes it much more enjoyable. Absolutely. Well, thank you so much for your time, and perhaps we'll get together. I have my sheet of questions here, and we maybe hit 4 of them. So, well, let's circle back and see how things are going later in the year. Sounds good. Thank you so much. Thanks. For more information on investing in gold and silver, talk to a Shift Gold precious metal specialist today at 1-888-GOLD-160. That's 1-888-465-3160. Or visit us on the web at shiftgold.com. You can keep up with all of the latest precious metals news at shiftgold.com/news, and tune in each week to the Shift Gold Friday Gold Wrap podcast. This is your host, Mike Maharrey. I appreciate you watching, and I'll talk to you again next time.